There is no freaking way this is the bottom, guys. There's no way you can convince me. This is another one of those traps, in my opinion, which, who knows, we might have another day, 2-3 days of green here, but we've seen this happen time and time again, at least over the past couple of weeks. We have a little bit of green, and then lo and behold, we get that insane selling pressure where we have one of those 4, 5, 6, well, I guess we haven't had a 6% red day, but we've had a 4 to 5% red day, and you guys know how that goes. So I want to break down my thoughts on the markets in this video, charts, stocks, all that good stuff. But before we do, Moomoo has upped the ante. You can now get 10 free stocks, each up to $2,500 with a $100 deposit. That is linked down below. And if you want 6 more stocks, you could also get 6 stocks from Webull with any amount deposited. Again, all of those stocks are linked down below. And just know, guys, the proceeds that I get from that, it really helps out the channel. And you guys get some free money as well. It's a win-win situation. So with that being said, let's dive into the video and break down what is going on and why I believe this is not the bottom. This is not the bottom, in my opinion. So today we had the Dow Jones close up 1%. The Russell went up 1.4%. We had a freaking crazy day for the NASDAQ, up 2.5%, as the Dow went up about 1%. So everything went up over 1%. NASDAQ up over 2%. The VIX went down 9%, closed right under 30, as we had gold up 1.3% on the day, and silver went up 3.6%. So monstrous green day for silver. And last I checked, I'm not going to check now, but last I checked, Bitcoin, Ethereum, crypto in general, it's still in the gutter. It's still in the toilet. Last I checked, it is red. So let me show you these charts, right? And like I said in the intro, this has happened time and time again. And yes, we have sold off extremely aggressively in the past couple of days, which is why I said in the intro as well, I wouldn't be surprised if we had another maybe 1, 2, 3 green days ahead of us, and because of that massive sell-off. But overall, we've seen this happen time and time again. Look at what happened last time we had a little relief rally, which I did call out, by the way. This was about a month ago, 3 weeks ago. You know, we went from 385 on SPY to 419, 420. Look what happened. We got to 370 in the matter of a couple of days. Triple Q was, let's see here, right around 280 when we called for that relief rally. It went all the way to 315, and now it just recently hit 273. So if we do see another big push here in the short term, which is possible now that the cat's out of the bag, we had the Fed meeting today, press conference, Q&A, which, mind you, I did break that down in my previous video, which we just talked about the Fed, interest rates, the economy in that video. So go check that out. I'm not going to dive into that in this video because I don't want to overlap the content. So go check that out. But like I said in that video, pretty much, I wouldn't be surprised if we do get a little rally here, you know, just a short-term rally. And I'm saying that again in this video. So, you know, if we do get that, watch for sellers to come in anywhere from 290 to 295 on Triple Q. Heck, maybe even here. I mean, if you guys take a look on the intraday chart, we had another big pump after I made my previous video to 286 on Triple Q. So in other words, we hit a fresh intraday high at 3:40 p.m. on the East Coast, and SPY hit at that same time right around 384. So we had a big push heading into close, or right before close, and actually heading into close, the last 15 minutes, we sold off pretty aggressively, 1.3%, violent sell-off for SPY heading into close from that intraday high, and Triple Q in that same time period, last 15-20 minutes of the day, it went down 1.5%. So it's been a crazy day, you know, up and down, but overall, I guess you can say the Bears, or rather the Bulls, won the day, but again, in the grand scheme of things, I'm being very careful here. So I'm actually looking to potentially buy SQQQ, not tomorrow, but if we do get another, well, it could be tomorrow, who knows. But the next time we get a big pump, if we get another pump in these markets, guys, let's say SQQQ goes to 295, 290, like I said, that's where, or if Triple Q gets there rather, that's where sellers will step in my opinion. Then we could hop on SQQQ, which is a 3x bear ETF. It goes up whenever Triple Q goes down. And same thing with the S&P 500. SPXS is one that goes up when the S&P 500 goes down. So let's say we get maybe another green day or two, which I'd prefer, to be honest. That could set us up for a nice dip buy here on SPXS, which if we got that around 25, 26 bucks, I think that'd be decent. 24 as well would be pretty solid. And we could ride that up as the markets most likely are not at a bottom yet, in my humble opinion. Because if you think about it, look at the macro environment that we're in right now. You guys know this. I'm not going to go into the 5-10 minute rabbit hole that we would get into if I really dove into it. But you guys know, you know what's going on. We have a crazy amount of inflation right now. We have the Fed, which is going to only increase rates from here. They're not cutting rates anytime soon. At least that's what they're saying. And they're tapering the balance sheet, which is it's only going to become more aggressive. The tapering, that is, when September rolls around. So what do you think? I mean, I think there's going to be another low hit. And am I saying we're going to get into the next Great Depression? I'm not necessarily saying that, but all I'm saying is, the S&P 500 might need to come down 25, 30%, maybe a little bit more before the bear market is over, or the crash, quote unquote, is over. And currently, the S&P 500 has come down. It has come down 20%, but only 22%. Which we could have a little bit more work on the downside to do, in my opinion, with a target in the short term, maybe in the next couple of months on the downside being anywhere from 340 to 345. On SPY, that was right where it was before the COVID crash. And Triple Q, I've mentioned this before, but I'll say it again, guys. Triple Q, right before COVID crash, was right at 230, 235. That's where this could be going in the short term. Maybe, we do have another 10. Well, maybe not in the short term, but if things got uglier, Triple Q could go down another 10, 15% from where it is now. No problem. So what do you guys think? Let me know your thoughts in the comments. As always, smash that like button and make sure to subscribe. It really helps me out in the YouTube algorithm. And of course, without you guys, this YouTube thing wouldn't be possible. Without your support, hitting that like button, subscribing. So I appreciate you guys as always. And if you haven't gotten your free money yet, 10 stocks for Moomoo. They just upped the ante. They hit me up yesterday, I think it was, that they're upping from 5 stocks to 10 stocks. So get those stocks from Moomoo down below. You could also get 6 stocks from Webull. It's free money. And again, it helps out the channel. I appreciate you guys. So with that being said, let's talk about some stocks. So I'm not going to lie. We don't have too many stocks to talk about in this video because earnings season is drying up. Tomorrow we do have Adobe and Kroger, which I'll touch upon very briefly in this video. But earnings season is pretty much over. But don't worry, because it's probably going to be starting again within the next couple of weeks. As once earnings season starts drying up, we're not seeing many reports. We have a couple of weeks, or a week, 2-3 weeks of not really nothing, and then we start seeing the big companies reporting again. It's a cycle, right? You guys know how that goes. So we have Adobe tomorrow, ADBE, which is one that I've mentioned many times. You guys are probably sick of me talking about this, but I've said Adobe between 250 to 300 a share. That is where I want to buy it as a long-term investment. So personally, I hope they go down on this earnings report. They're projected to do EPS of $3.31 with revenue of $4.34 billion on the quarter. So they report after the bell tomorrow. You guys can see they hit a fresh low of 367. So if we start coming down low 300s, I'm going to be very tempted to buy some Adobe, especially under 300, which you guys can see during the COVID crash, Adobe got to $255 a share. And before the COVID crash, wow, look at that. We're actually now trading under where it was just before the COVID crash, which, mind you guys, at that point in time, as we're, living life, going into COVID, well, at that point, we didn't know we were going into COVID, but now in hindsight, we obviously know. Well, obviously we now know. At that point, the markets were frothy. A lot of people were saying, oh, we're at all-time highs, which we were. Things need to cool off. We had the COVID crash, and look how crazy we went after that. The money printing, all that craziness. Adobe went from 390 before the COVID crash to 255 to 700. So it needs to do more work on the downside. 200, even $200, guys. Bring it on. 200, 250. That's where I'm loading the boat on Adobe. But for now, I'm just being patient on it and just going to watch it, and see what it does. Keep it on the watch list. I traded it. You guys in my Patreon know I traded it a couple of weeks ago, made some money on it, and locked in the profits. And now I'm just waiting. So the next one is Kroger KR. Like I said, they report earnings tomorrow as well. And Kroger went up 1% on the day. And let me see, what did Adobe go up? 4%? Oh no, 1.6. Not that close to 4%, but 1.6% for Adobe. And Kroger, again, is reporting tomorrow after the bell. And what we notice here is not that previous events, predict the future, but last time they reported, Kroger went ballistic. The stock went crazy from about $45 to 60 plus bucks in a couple of days. So the wedge is strong here. We're holding higher lows and making lower highs. The chart looks good in my opinion. So if we do get strong earnings, not saying again the past predicts the future, but watch out for a big pump on Kroger. I think it's possible if they show strong earnings. I mean, you guys saw what happened rather with FedEx. They just reported that they're going to increase the dividend a little bit, and the stock went berserk. It looks like the markets these days are looking for any companies that are surprising or, posting good numbers, because it's not what we're really getting. Sure, some companies are doing very well, but a lot of companies are suffering from inflation. Profit margins are shrinking. Earnings are coming down. Sure, revenue could be going up, but that has a lot to do with inflation as well, increasing the prices. So that is not real revenue growth for some of these companies. So if we get good news, strong guidance, or, signs that earnings are not being hit that aggressively, which FedEx showed us that with the increase in the dividend. If Kroger shows us that, we might get a big pop. Who the heck knows? So I have my alert at $55. I might as well put another one at $53, and we're going to watch and see what this does. Ticker symbol KR. And let's look at the degenerate stocks here. No offense if you guys trade these. GameStop, GME. It went up 2.4% on the day today. Nice day for GameStop here, and it's at $130 a share. It looks like we are making a break above the 50 SMA, which is good on the 4-hour chart here. And by the looks of it, this wants to go to the top of the channel. And I think it could. If we get another day, 2 days of green, which is possible, watch out for the breakout on GameStop. I think it's in the cards, and I would not be surprised if that did end up happening. Let's look at AMC. AMC is the ticker. Pretty easy one to remember. AMC went up 7% on the day today, and look at where it's at. It broke 1250, which is good. That was a resistance I was looking at. Now we're right under $13 a share. If we do break 13, where's the next main resistance? $14.50 to $15, maybe $16. There could be a big breakout on AMC. Same with RedBox, at least last I checked. Let's take a look at it now. RedBox is up. It went up 8.6% on the day, closed a little bit under $11 a share. And look at what it did today. This is pretty bullish in my opinion. We got a bounce above the 50 SMA, closed above the moving averages, and we broke the highs from a week ago being around 1140, and now we didn't close under those highs from a week ago, but earlier in the day, we broke above them. I think we hit 12 plus, right around $12 at around 10:15 a.m. on the East Coast. So that is a good sign for RedBox. Now let's see if we can get a push back over the high from today. That's going to be important. If this could take out $12 tomorrow, there's no telling where it can go from there. We've seen what it's done in the past couple of days, and now just because it did that in the past couple of days doesn't mean it's going to do it again. This could easily crash to $5 tomorrow, so keep that in mind. Trade at your own risk with all of these stocks, guys. Even Adobe and Kroger, although those are way safer, there could be risk in those as well. Of course, like there's risk in anything you do in the stock market, but there's elevated risk with GameStop, AMC, and RedBox, especially with RedBox, guys. So I'm going to put my alert at the high from today, $12. Mark is at or above, and we'll see what happens. Do we break that tomorrow? Do we not? We shall see what happens with RedBox. And the next one here is Foot Locker, ticker symbol FL, which Foot Locker today outperformed the market. It went up 5.2% on the day, closed right under $30 a share. And look at this. On the 5-day chart, this is good. We're getting a golden cross, and we closed above and broke above today, both moving averages. And on the 20-day chart, let's see what we got here. Well, not that much on this chart, but on the 4-hour chart, we're noticing we are riding this uptrending channel, right? And mind you, we are a little bit under the moving averages on this 4-hour chart, but if we start making some headway above $30, $31, this is where Foot Locker could really start breaking towards the mid 30s. And let me see some numbers here on Foot Locker, not to get too carried away with this stock, but this could be a decent value play. Now, some people argue it's a value trap, which it could be. Right now, the P ratio trailing 12 months is 3.6. Market cap's $2.7 billion with a dividend, holy crap, of 5.7%. So if you want a value stock, and I'm not saying for sure it's a value stock, it could be a value trap. Who knows? Do your own research, guys. But if you want a company that is trading very low on a P basis, high dividend, and I think they've raised their dividend maybe a quarter or two ago. If you want a company like that, look at Foot Locker. You know, this could be a company that you might want to take a look at for some dividend income, if you like dividends, that is. Me personally, I'm not at the point where I want a huge dividend portfolio because I think it's tax inefficient. If you guys really look into it and you understand what a dividend is, sometimes you might want the company that gives you that dividend to just keep the dividend in the business, if that makes any sense, to put it in layman's terms. Because when a company pays you a dividend, they take that dividend from their earnings, and then they have to pay tax on that, and you have to pay tax on that. So you're paying taxes on the dividends, when if they were to keep the earnings within the company and didn't distribute it, the earnings to the shareholders, you wouldn't pay taxes. So you essentially keep more in equity in the company, if that makes any sense, right? So that's a big argument against dividend investing, and I tend to agree with that. If you're younger, if you're in your teenage years, especially 20s too, especially 30s, even 40s, even 50s, I mean, you might want to consider, not having so much in dividends, or a lot of dividend stocks. That's just my opinion. And let me know your thoughts as always. I'd love to know your thoughts in the comments. So let's see how long we're in here. About 17 minutes. I think that's a good time to wrap it up on that note. So let me know your thoughts in the comments. Smash that like button, subscribe. Feel free to join my Patreon if you guys want all my moves in the markets. That's linked down below. And you could also get, again, 10 stocks from Moomoo. No joke. They just upped the offer. That's linked down below. Make sure to deposit at least $100. And with any deposit on Moomoo, you get 6 stock, or rather Webull. I mixed these up, guys. With Webull, you get 6 stocks from them with any deposit. All that's linked down below. You could also get $40 off Seeking Alpha Premium. Again, link down below. You guessed it. And with that being said, cheers, guys. I'll catch you in the next video. Yep, I just embarrassed myself here. I have water in a tall beer glass. Yes, I'm doing that right now. So I'll catch you guys in the next video. Go watch the Fed video from before, my earlier upload. Peace out.